Afternoon, everybody. It's good afternoon from the UK. David is joining us from the States, where it's still good morning, I believe.
Yes, good. Well, good morning, good afternoon to everyone listening in today.
Thank you. So thanks for everybody for joining us here at the Festival of Enterprise. You know me by now, Alex Chisnall. Thanks for joining us. Hope you're all staying safe and well. Hope you enjoyed the bank holiday weekend in the UK. If you are indeed watching this from the UK, like probably 90% of our viewers are. So today, subject that's probably couldn't get more on point, really. We're talking managing your cash flow and different financing options. So cash flow crisis, alternative financing options. So David Goldin is the CEO and founder of Capify, and he's going to be running through a presentation, but then opening up questions from all of you business owners and entrepreneurs who are watching. That's where we want the content to come from. So any questions that you got, I will tell you, just like Jazz has done here from Wolves, just post up into the chat box there rather than the ask a question button. Hi, Graham. Thanks for joining us as well. And that way, David will get to see your questions as well. So going to be covering a number of things during his presentation. So why is cash flow so important? How can alternative finance ease your cash flow crisis? The benefits of using alternative finance, how you can use alternative finance within your business, and accessing alternative finance, and of course answering any questions. So I won't go into too much of an intro because you probably mentioned that on your slideshow yourself, David.
Yes.
So without further ado, I will share the screen with everybody and open it up to your presentation. And as I said, those of you just joining and can see people joining now, then please just pop your questions into the chat box below. So without further ado, I am going to share the screen, make the focus onto David's screen here. There we go. And I will, to preserve the bandwidth, I'm going to knock out my video and I'll let you take things away, David. Thank you very much.
Thank you, Alex. Well, good afternoon, everyone. Thank you for tuning in today, and I want to thank the Festival of Enterprise for having me speak today. First and foremost, I hope everyone is healthy and safe during these unprecedented times. And just as a brief background, I am the founder and CEO of Capify, an alternative lender to SMEs. That originally operated in the States, starting back in 2002, making us one of the first alternative online lenders, fintech companies. We had exited the US space in 2017 to focus on the UK and our Australia business. We were one of the first non-bank alternative lenders in the UK starting in 2008. And what I hope to do today is walk you through really about one of the most important things, whether during a pandemic or outside of a pandemic, that's always at the top of SME owners' minds, is cash flow. And obviously during these times, making that aspect of cash flow becomes a lot more challenging. So really today I hope to cover the following, just a brief background on myself, why cash flow is so important. And while many of you may have attempted to go to your banks, whether it's through the CBIL scheme, the business bounce back scheme, or other aspects, the bank process historically for SMEs and even during this time of crisis can be quite challenging. And even for those that do get their CBILs loan or their business bounce back loan, in my opinion, and doing this for over 20 years, or nearly 20 years, I should say, I believe that's going to be a short-term fix, and SMEs are going to need even additional financing as the UK starts to open to be able to come out of this and really look into the opportunity phase of their business. And really the value add today for your time is really walking you through the different forms of alternative finance that you may or not be aware that's available in the marketplace. Giving you some examples of how our company, Capify, the products and services that we offer to potentially help, and obviously opening up the forum for any Q&A. So just a brief background on myself. Obviously, I'm sure during this time that you're listening to various different webinars about your business. I can assure you that this will be a great use of your time if it's about alternative financing. As I said before, I'm one of the first in the world to actually start and found a non-bank alternative lender. Started off in the UK in 2008. But the States, we started off in 2002. We grew the business to 225 people operating in 4 countries, the US, the UK, Australia, and Canada, exiting the US and Canadian market from that perspective to really focus on our Australia and UK business. Capify UK secured a £75 million credit facility with Goldman Sachs in 2019. And, just to give you an idea of my credibility, I've been featured on various media outlets around the world, anything from Sky Business, Bloomberg TV, Fox Business, the Wall Street Journal, the New York Times, really the Sydney Morning Herald, really discussing about, alternative, lending and so forth. So moving right along here, jumping right into this, and the topic of today is really about cash flow and SMEs. And some of this pertains to a non-COVID environment and obviously the environment we're in today. And if you really think about it as an SME, everyone on this webinar is in a variety of different types of businesses, different industries. Some are offline, some are online. Some are being more impacted by COVID than others. But during COVID or not COVID, the one thing that affects every single business owner really globally is cash flow. And at the end of the day, without cash flow, you could have the greatest revenue in the world, the most amount of assets, but without cash flow, you don't have a company. And COVID has thrown some unprecedented challenges for various SMEs all around the country that I hope today to sort of walk through ways to prepare for this, how to react to it, and perhaps some solutions. So many SMEs, depending on the size, some have the resources to do cash flow planning and some don't. But I think really in a time of COVID, to really understand and not to dig the business into a deeper hole is really to do proper cash flow planning and management. And this is the type of thing that I think that you need to really do on a weekly basis, because for many of you, and depending on the industry, there's not a lot of visibility into what even next month brings or the month after. So I think as things progress and evolve in this very volatile, unprecedented situation, I think having financial planning and really understanding your cash flow, one will burden the stress as yourself as an SME owner and your employees, so that you can make decisions, and especially now quick decisions. And 2, to figure out a way of when it comes time for opportunity during COVID to really go about this. And the thing that you need to understand is that everyone should really be thinking about company preservation right now, where the majority of your business models, I would imagine, there's a certain amount of fixed overhead. And if your sales are down or your revenue's down or if you're closed right now, these are situations that can become very dangerous and you need to react quickly. Or if you're in a situation where in COVID you have to charge less, you're going to be receiving a lot less margin for your products, and again, affecting both your margins and your profitability. And this really ties back to the financial planning. And the other important part, depending on your business type, your cash flow and your payments can be severely impacted. If you're a restaurant that's closed, or a restaurant that's now doing takeaway, or a retailer that's closed, or a traditional business where your customers are paying late, I think you need to really focus on the strategy is communicating with your customers, obviously being sensitive to the fact, but also letting them know that you're an SME yourself. You're not a bank. You're not backed by the government where they're going to give you a bailout for the most part. So really working with your customers to figure out how you can best manage those late payment schemes, or those late payments or lack of payment that you're receiving. The other thing that you have to really be focused about right now is your inventory. If you're sitting on a lot of stock right now and there's not a lot of sales, thinking about ways to maybe move that inventory, even if it's at a break-even cost right now, pivoting to an online strategy, because that's really a way right now to generate cash. And I think the name of the game right now is to really generate as much cash flow as possible. And really, most importantly, whether there's an old saying that the time to raise money is when you least need it. And I think the majority of companies right now in the UK market do need capital. But even if you feel that you're starting to figure out a plan and evolve, There's just so much uncertainty right now when the country's going to open fully. It could open and shut down partially. I think that all SME business owners should think about having a backup or reserve access to funds for those that feel they have enough cash flow right now. And those that don't, we'll walk you through the various ways that if the government schemes are not working for you, or it's not enough, or your bank isn't working, or it's not enough capital, these are the things I want to walk through today. And again, depending on your business type, there could be some, seasonal variation in your business. And that really speaks to my point before, which is really making sure that you have a proper cash flow reserve during these uncertain times. So up until the last several years, most SMEs looked at their bank as the way to really get access to capital. And traditionally, a traditional business loan, for the most part, secured through a bank, or maybe unsecured, or through a credit card with a personal guarantee. But there are far greater ways today, and there are constantly, especially pre-COVID, a lot of innovative companies that have come out with various types of ways for SMEs to raise capital, raise finance, and to walk some of them through today of different options to really think about that could be out there in the marketplace. Going back to my point before, if the bank or a CBILS loan or business backed loan is just not enough, or if it is enough, thinking about phase 2 of how to get access to capital for your business. So walking through the various forms of alternative finance, the first one is peer-to-peer business lending. And this is where individuals or what we'll call institutions or larger sources of capital will allow a business to publicize their needs, and on a peer-to-peer business lending platform, having multiple people invest in a loan. Now, every one of these options that I'm describing right now have all changed during COVID. And the idea of being able to access money for your business is really going to be based on the current economic environment, how your industry is affected, or how you can demonstrate how you've pivoted your business. Let's say, for example, if you were a restaurant that is now shut for in-person business, if you've been able to pivot your business model for a high amount of takeaway and a high amount of online ordering with reduced cost by not having a staff as much and really just more of a back office, which would be the kitchen, and proper staff that are working with logistics, getting the orders out. These are ways that vendors can look at your business and not just automatically say no, or a lender, simply the fact that you're classified as a business that may be an industry severely affected by COVID-19. The next way, and this goes more into the retail and restaurant type businesses, or any business that accepts a large form of their payment from their customers through credit and debit cards, is what's known as a merchant or a business cash advance. And this is one of the products that Capify offers, my company, whereby a merchant cash advance or business cash advance provider can advance your business a lump sum of money upfront in return for a percentage of your future credit card, debit card sales from your customers until that provider is repaid. And typically this product, while not designed for a pandemic, actually works very well in a pandemic, because the repayment, unlike all the other methods, is not a fixed amount, whether it's daily, weekly, or monthly. It's a percentage of your sales. So if you're going to have peaks and valleys during this pandemic, the repayment period actually works with your business's cash flow. So if you're having, for example, if you decide to close on certain days of the week, the repayment amounts will slow down. And as the sales begin to increase, you're able to repay that provider within the peaks and valleys of the cash flow of your business. The other type of fundraising is donation-based crowdfunding. We're seeing that more and more within COVID, where you may have individuals that are loyal to a certain business or a certain enterprise, or looking to see certain shops, be able to fight through this. Typically more on the smaller amount, typically not as prevalent as some of the other things I described, but that could be an option to look into. The next form is invoice trading, typically known as factoring. And again, this really depends on the business type that you have. And it's also going to depend on the strength of the invoice rather than of the person that owes you the money for the invoice, rather than the strength of your business as much as a whole. So if you have invoices from companies that are more established or medium to larger size enterprises, that could be another way to raise finance, is reaching out to a factoring company or an invoice discount provider to take a discount on your invoices that you have today to raise cash, whether it's for immediate needs or to have reserves. And while you may be discounting the invoice to a provider, it could be a way to raise quick funds. And at the end of the day, it's really about company preservation at this point and not so much the cost of the capital. Another form of funding is reward-based crowdfunding. And this could be a way, again, for your loyal customers that you have within your business or other individuals, if you offer a product or a service where they're not actually getting equity or a financial return, but they're getting some other form of reward for investing in your business. It could be, if you're a retailer or a restaurant, it could be a gift card for products at a future date. If it's a tech product or a product that you're launching, a free sample as that comes out. But there are various crowdfunding platforms out there that are really based on reward-based rather than actual the investor doing that. And again, it's more in the spirit of we're all in this together, that there are several businesses that are able to raise money from their existing customers that want to see them stay in business, perhaps with free product or a discount on products or a voucher or various other forms of crowdfunding. The other way to do this is putting together, depending on the size of your business, is similar to a bond, a debit-based or debt-based security to allow people to go out there and raise money to raise debt for their business. And typically investors would receive a non-collateralized note to be paid back over a period of time. And this one may be a little bit more challenging than some of the other ones out there, but allowing people to go out there and raise money from that perspective. And last but not least, and this is the most popular form of crowdfunding, is equity-based crowdfunding. This is primarily used in a non-COVID environment by early stage firms, but we're starting to see now more established businesses using the platforms out there, and there are many of them in the UK, where investors can actually invest in the business as little as £25 into a business up until tens of thousands or hundreds of thousands of pounds into a business to receive equity in the business. So that's another form, depending on the size of your company, of your enterprise, to consider, as far as other forms of alternative financing. To talk about alternative financing as a whole, and for many of you on this webinar may have already been familiar with it, others aren't, and I expect this number that I'm about to run through to go up even further during COVID, as we see the banks are very limited in the amount they can give out in a COVID loan or a business bounce back loan or just lending in general. But pre-COVID, 30% of all lending to SMEs came from funders other than the big retail banks that we consider the alternative finance industry. In 2017, $4.2 billion of alternative finance was provided to startups and SMEs in the UK. 90% of that was in the form of debt, and the remainder of that in equity and non-investment models. So, for example, the reward-based crowdfunding, which I mentioned before. As far as peer-to-peer goes, that was 9.5% of new loans issued to all SMEs by the UK banks. And the majority of the alternative financing loans that are receiving this are SMEs that have annual turnover of £2 million or less. So there's quite a bit of SMEs in the UK that can qualify for an alternative finance product. So why do SMEs choose alternative finance? So for one thing, there's a great selection of alternative finance options available in the marketplace. Another reason is really speed. Many providers such as Capify can provide a decision within 24 hours. There are funds available, unlike a bank, could be provided to you as fast as same day, as much as a few days, and there's a lot less paperwork required than a traditional form of financing. less bureaucracy compared to traditional financing. As I said before, a lot less documentation required, which in this environment, especially, speed is very, very, very important. There's a lot of flexibility within this. There's various repayment options, whether it could be short-term, long-term, percentage of sales, fixed amounts, getting paid, for example, on invoices. The repayments done when your clients are paying you rather than you having to pay the provider. And really, there's many different products out there to really structure this in a way how an SME would see this as best being fit. So each platform has various knowledge within various sectors, various industries, various sizes of SMEs. So my recommendation is really figuring out the best way and the best product that best suits your business from an alternative finance provider. And how do SMEs use alternative finance? Really, as I said before, when we first started this webinar, cash flow is really the lifeline to a business. So really, most importantly right now, at the highest level, it's all about cash flow and making sure that the business survives. But at the same time, my belief during COVID-19 is that there were really 4 phases during this. When it first happened, there was complete panic. People were burying their head in the sand. And whether that's in the personal life or your business life, it's very hard to have a successful outcome when you're in that panic mode. Panic really shifts then to fear. And in that fear mode, it's starting to really think rational. Obviously, people are very afraid of what was going on as this first started, and to some extent still are in the future. But eventually that fear evolves into reality or realization. And I think we're somewhere in that mode right now. We're realizing that everyone has now become accustomed to this quote-unquote lockdown in the UK market, accustomed to this affecting their business and their personal lives, but at the same account starting to focus on the next phase, which is the opportunity phase, and how to come out of this, both in their personal lives and both in their business and professional lives as well. So while we have to think about cash flow, you have to also think about expansion. So whether it's your current products or pivoting your current products, if you had a business where it requires a lot of physical presence, thinking about how to adapt to that, especially when there's not a lot of visibility from the government of how this is all going to work coming out of it. Perhaps pivoting your business to more e-commerce or online or more social distance friendly environment or more of a pickup environment. How to capitalize on opportunities, especially where there's going to be more people working from home than ever before. So tech will serve a much more important aspect. So really, it's really the right balance of cash flow, but investing in the proper either logistics or technology for a post-COVID-19 world as we start to come out of this eventually. Whether you need to hire back existing staff that was furloughed or hire new types of staff members as well with a new skill set. Also training your staff as far as how to operate in this environment, and really investing in marketing and advertising to get the word out as you're reopening, or new products and services that your staff that your customers may not have been familiar with in the past as much. And then in some cases, depending on your business type, you may need to renovate your premise as you're allowed to reopen. So if it's an office that's going to require more social distancing requirements, or a retail shop or a restaurant, making sure that your staff is properly set up logistically. If they're interacting with customers, making sure they have the proper masks and other PPE equipment that might be required from that aspect. And obviously, depending on your business type, purchasing the right amount of inventory. If you've been closed for a while, if it was a food-based business, really, making sure you have the right inventory to reopen from that aspect. Moving right along about Capify, as I said before, we've been one of the oldest alternative lenders in the UK market, nearly 12 years experience, which is a lifetime for this industry. We offer 2 products ourselves. One is a small business loan that really is for just about any type of business out there. We're able to offer a lot quicker speed and availability than a bank can. We typically don't require a business plan, no face-to-face meetings. In fact, we don't require business plans. And our repayments are a lot more friendly or easier to manage for a business owner. We have small daily or weekly micro repayments. We can fund this within days, same-day approvals. We don't require secured assets in our current product line, typically secured with a personal guarantee. And then we also have our merchant cash advance product, which are for those businesses that have card takings from their customers on credit and debit cards. It could be a physical business, could be an e-commerce business. Similar to our business loan, speed and availability, no business plan required, no face-to-face meetings. The repayment is very friendly in this environment for the fact that even before this environment, the repayment is a percentage of the business's cash flow. So as sales slow down, the repayment slows down and then accelerates as sales start to increase. There is, and the total repayment amount is a fixed amount. So you're aware when you enter into the agreement how much you will owe based on the advance that we give you. But there's actually no fixed time period because it's really based on the ebbs and flows of your business. And that product too is secured by a personal guarantee and is not a secured product per se where you need to pledge assets from that aspect. So with that said, happy to turn it back over for any Q&A that anyone may have, regarding alternative finance, regarding anything that I've discussed today, or any questions as an SME business owner that you may have operating in this environment.
Thank you very much indeed. Okay, just bringing myself up on screen as well. Yeah, so any other questions that we've got, everybody watching today, please post them up in the chat box below. Are there any specific businesses that you want a specific answer to? Patrick, straight in there. Thank you, Patrick. I hadn't even finished my sentence. That's brilliant, guys. Okay, so Patrick says, how best to approach the setting up and marketing of a product for the inevitable forthcoming recession as a startup?
Okay, thank you, Patrick, for that question. So I think a lot of it is you have to be able to pivot very rapidly in this environment because nobody knows where this is going. The Prime Minister doesn't know where this is per se going. No president of any country knows. A lot of it is the ability to pivot and adapt accordingly as things progress. And I think one of the benefits an SME owner has over a larger organization or a government is that we could pivot a lot quicker. So I think in this environment is you need to do a lot of testing. I think it's very rare that someone's going to get it right the first time. And I think you need to have different options with different price points as well, Patrick. And I think it really depends on the type of business that you have. So, we're seeing now that, for example, I could talk of in the States, we're seeing local pizza shops offering do-it-yourself kits for families to make their own pizza, right? I'm sure many people on this call have turned into teachers as well with homeschooling and are desperately yearning activities for their children. So I think, as time goes on, those products, really can be there. And thank you for that question, Patrick. If you could elaborate a little bit on the type of business and the industry that you're in, perhaps brainstorming there. But I think it's really a question of focusing on the now and the ability to pivot, and especially during this time with different price points to test. I do think people are more captive than ever when it comes to webinars, perhaps educating your own customer base on a webinar or email marketing. I think is really having a better, coming out from that aspect.
Patrick says, okay, that's good advice. Thank you. My product is a micro house business. Okay.
So I think on a micro house business per se, I think the rules really would apply similar to any other business per se, which is to figure out where the first thing I would do is survey your existing audience via email and perhaps get an idea how it relates to your product. To be candid, I'm not a micro house expert per se, but I think the principles are the same for any business type, which is really survey your current customer base of what you're thinking and perhaps even running some ads or surveys on social media to really get feedback, both of the type of offerings that people would be interested in and at the various price points, to see as we come out of this or as we're in this, of where you feel that your offering will or won't work. And it's very rare that a business owner is going to get it right the first time, especially during these unprecedented times. So I think it's going to be a lot of trial and error.
Yeah, absolutely. Patrick says, many thanks. What have you seen as being like the most, got a few other questions, but David, what have you seen to be the most popular options? And do you think when it comes to crowdfunding, so I've had quite a few questions regards this. Do you think the investors are out there at the moment still, or do you just think they're doing more due diligence, being a bit more cautious?
So I think the answer to the question is, like everything else in life, it's about timing and the type of business that you have.
Yeah.
So I'll answer that in two ways. All of us sitting in quarantine, right? A day in quarantine feels like a week or a month in the old world, right? Or a week in quarantine seems like a day or a month in the old world. So I think if you ask people to invest in your business 4 weeks ago, where things look very grim, the financial markets were not looking very good, there were no signs of other countries reopening. Unless you were selling, medical equipment or masks, there's very few industries that people really would have been interested in. As every week that goes by, the interest level of people, and as I said before, the phase of opportunity starts to get greater and greater. So I wouldn't get discouraged if you're talking to investors or in a crowdfunding or even an alternative finance company. That alternative finance companies have really shut down their criteria from where they were a month ago, and they're slowly but surely, going to start to reopen at some point. I think it's a function of when the UK market reopens. But I think if you were able to prove, and we keep going back to the restaurant example or a retailer or an e-commerce, that you were able to demonstrate demand for your products during COVID, you're going to have a better chance of raising that money.
Yeah.
And I think the ability to raise money 3 weeks from now is going to be a lot different from the ability today. And I think a lot of it's going to be based on, and if you're a UK business, is really what is happening psychologically in the country. If they're starting to lift restrictions, if things are starting to open, and you have a very good plan of how you're going to pivot in a COVID world, I think that's going to greaten your chance of investment.
I had on one of these webinars, Lord Billamoria, who's like the Cobra Beer founder and vice chairman of the CBI over here, and he'd literally just had his first virtual meeting via Zoom for the House of Lords, and he had some more up-to-date stats than probably the media are giving us on a daily basis. But he was saying at that time when I spoke to him that it was something crazy over here, like 300,000 businesses had applied for like this CBILS loan scheme over here, and yet 30,000 businesses had been approved, and it was something like the government have made whatever it is, 300 billion available, but it was something like 10 million pounds or something crazy that had actually been given. So do you think, how quickly can people use alternative finance? You mentioned like 24 hours and a couple of days.
I think, look, I think we have to be realistic here, and including Capify ourselves. So I could, if you look online, there's actually articles published that I was featured in. I sort of predicted that would happen with the CBILS. Obviously, coming from the US, we were a few weeks ahead of you with the government rollout programs, and a few weeks doesn't seem like a long period of time. But going back to my point before, it's an eternity in this environment. And the headline is the CBILS is government backed. Well, it's only backed 80%. And no bank in the world can afford anywhere close to a 20% default. So the banks are still using their underwriting criteria pre-COVID on the approval. So no brainer that the approval rate would be very, very, very low. Okay. And what I was voicing and have expressed, a lot of voice about was that the only way this is going to work is 100% guarantee from the government. That's the only way that you're going to get this money out in mass. And I think that's where the business backer, I think a lot of people are thinking the same way, because the business bounce back scheme had come out. But again, that's for the smaller end of the spectrum, right? But let's assume some of your viewers on this call got these schemes. That's only short money. That's not going to. We know historically in the last 10 years and almost 20 years of doing this globally, business owners need capital in a normal environment every 3, 6, or 9 months to constantly evolve their business. There's very few businesses that never have to raise debt or some form of capital at least once a year. So in my personal belief, this is emergency short fixing money. The business owners are still going to need capital, and the banks aren't going to change their position when the dust finally settles here. The majority of your listeners or viewers on this call still won't be able to easily get access from the bank once this all settles. So to answer your question again, I think right now, if you're a restaurant right now, it's going to be very challenging to get money from an alternative lender or a regular lender. Your best bet are the government schemes. But as time goes on, and who knows, nobody knows. I keep saying that all the time. You have all these experts, these talking heads on all these television shows. Nobody knows. Everyone on this call will know when it actually happens. And then 30 days later, when these businesses that were closed can demonstrate some form of normalcy or what it looks like in the new world, that's when their percentage chance of going to get money from an alternative lender will go up. That's not to say there aren't businesses now that can't get money from an alternative lender, but the box is so small right now because there's so much uncertainty. So you have to truly be able to demonstrate that your business was not affected by COVID, or that you've pivoted during COVID and you're doing well. Because otherwise, put yourself in the shoes of an alternative lender. They'll go out of business if they just gave money to everyone. That's why the CBILS program doesn't work. That they're still using pre-COVID underwriting criteria. So until you have 100% guarantee from the government, there's no way to lend. It makes great headlines and everything else, but I'm telling you, 20 years experience is impossible without 100% guarantee from the government. You have to extremely restrict who you can lend to right now.
Yeah, I mean that is the problem, isn't it? If they're using the lending criteria that they had 2 months ago, it's just not gonna wash now. Jazz says, what's the borrowing limit on SBLs?
So at Capify ourselves, we have a published limit somewhere around 150 to 200,000 pounds. That's not to say that we couldn't go higher. That's really more unsecured. There are alternative lenders that will go, up to £500,000 pounds. But once you start going above 100, 150,000 or more, many times it does require security or collateral to that amount.
Yeah, understood. And if you were we got a few like startup scale up businesses, what would your priority be for the next 4 weeks? Obviously over here we've just had this latest update from our Prime Minister last night, but things still haven't really moved much in any direction. It's still pretty much as it has been for the last 6 weeks. So yeah, what would your priority be for the next 4 weeks if you were that type of business?
So it really depends again on the business type, right? I think there's no blanket answer for all businesses, but I think the principles are all the same. It's company preservation. And I think business owners need to err on the side of caution when it comes to getting too aggressive with some of the plans, because I don't think anyone's going to come out of this gate and get it right exactly. And I don't think anyone's going to be rewarded to be a hero to really be aggressive here, but I think we'll be severely punished if they make the wrong call for their business right now. So I think you have to really slowly roll things out, from that perspective, to make sure that, you're properly managing the cash, because liquidity is probably tighter now than it's ever been globally in the history of the world. So if you are fortunate enough to get access to capital, I think you need to spend it very wisely. That doesn't mean there aren't opportunities, but I think you need to test. And once you see it's working, then it's when you really try and push and, scale that aspect of it. Now, there are always exceptions to the rule. If you're in a business right now that by design, your sales are up 10, 20, 50, 100%, then by all means, you're going to have a better chance of getting access to capital. And now is the time to capitalize on that, because you may have what I call the inverse opportunity. During COVID, while everyone's stuck at home and they may be going to their local grocer or store, local corner store to get food, you may be seeing a huge spike in sales right now. But at some point when the world opens up and people are back at their office, then your sales are going to come down. So there's really no blanket answer from that aspect. I think it's really on a case by case, doing a lot of testing, talking to your customers, getting feedback, trying unique ideas for those businesses that can, to capitalize on the fact that there's never going to probably be, hopefully in our lifetime, another opportunity to have everyone's attention all at once at home.
Yeah. Good answer. And from a few questions on this, when you're looking at, say, a couple of different options, like the cash advance compared to a debt-based security, what kind of minimum and maximum figures could people be looking at? And I understand it's going to be,
Yeah, I think
individual basis.
a cash advance, could start at a few £1,000s. I guess on crowdfunding you could, but I think the crowdfunding is more of a convenience for your friends and family to be able to invest in an easy way to do it. I don't think you're going to get professional investors on an individual basis to invest in a £5,000 or £10,000 loan. Perhaps on a platform itself, you may get an institution looking to buy a lot of these, but I think it's really going to be just an opportunity for a platform for friends and family and customers to make an investment for a much smaller amount. The other option is going to be the business bounce back scheme. That with 100% guarantee from the government is going to count. That's a solution that sort of de-risks the bank from the perspective you have on CBILS, and that tends to fall in the smaller amounts. So I think the business bounce back program is a good way for a business to get access to capital, stay afloat, manage the cash properly, execute on your short-term strategy, and then your longer-term strategy. Be aware there are alternative finance solutions out there like Capify to be able to get money, for your business.
Nice. And question again, and I'm going to preface it by saying you obviously haven't got a crystal ball yourself, David, but how do you think consumer and business behavior is going to change after lockdown?
My answer is nobody knows, and anyone says they know, they don't know. Right? I mean, I think all are cooped up. I can't, I think that, people, it's human nature. Humans are meant to be social. We're social animals and interact. So do I think in one form or another, I think you'll see plenty of businesses that will bounce back. Those that didn't have strong business models prior to this that require a lot of physical presence in their business may struggle. But I think there's going to also be many forms of opportunity. And, I think every country always likes to say we're resilient, we're strong. At the end of the day, the planet is strong. The planet is resilient. So we will come back. By nature, people are pessimistic, unfortunately, and there's too much gloom and doom. But at the end of the day, entrepreneurs are really the lifeblood of this planet. And I think in one form or another, it may look a little different. I think it's like anything else in life. It won't be as bad as everyone thinks it'll be. It won't be as great as everyone thinks it'll be. We will land somewhere in the middle, which typically is the way life works.
Yeah. And here's a question for you that's come in. What's keeping you up at night?
Keep me up at night is really the ability to start growing Capify again. As an entrepreneur, and I'm sure as many of your listeners or viewers on this webinar, it's a question of really understanding, getting visibility into the economies going forward. So, most of us are blind right now to what this is going to look like. I believe at Capify that alternative lending will be at an all-time high like we've never seen before. It's just the patience of getting there. Myself, like most people, we're not built to design. We're not designed to sit still in a home for this long period of time. So we're looking forward to the world reopening so that we can capitalize and really making sure we're prepared with both having the proper staff in place, the marketing to get the messaging out, the capital lend out, because I truly believe that there will be an unprecedented demand for non-bank lending for SMEs when the dust settles. These government loans, in my opinion, are short money, and I think that businesses will need in the next, several months as much access to capital as possible. And Capify, like many alternative lenders, are looking to be there to help provide that to SMEs.
Nice. And if you were, was this question we just had? If you had £10,000 to start a business idea today, what would it be? What would you be looking at?
Today, as in the 11th of May, I would probably focus on something e-commerce at the moment, or tech-related today, just because there's so much uncertainty. Or I would hold on to that money for a week, for a little bit and see what's reopening and see what the demand is in this environment where people are sort of migrating the transition back to the old way, which nobody knows how long that could take. It could take a year, it could take 6 months. I think there'll be different pockets of the UK. Obviously, London, similar to New York City, is going to be, a lot harder to come back to normal than, other pockets of the UK that are less densely populated and not as spread out.
And when lockdown happened, when you first heard about the coronavirus yourself, what happened to you and your business? What kind of actions did you do straight after you heard?
So we had to make some very difficult decisions. I did have a little bit of a head start because I saw what was happening in the U.S. and my staff was probably a little bit shocked that I acted so quickly because I knew the inevitable was coming to the UK, being the lockdown that you're in right now, because I experienced it in the U.S. For some of your viewers that have been to the U.S., when you start hearing that, our major sports leagues were canceled, universities were shut down. For those that who've ever been to the city of Las Vegas, it's unfathomable that that city can close down. Mm-hmm. And I knew, both in our UK and Australia business, this was coming. I knew we were not able to make new loans in that visibility. So I had to make the very, very difficult decision to preserve the company. Otherwise, there would be nothing left for anyone of really, reducing our headcount, immediately and really controlling operating expenses so that we can emerge from this successfully. And what we've done is similar to what your company's doing is we've been very informative to our SME customers and others that have contacted Capify in the past of ways to get access to the government scheme programs, take advantage of any tax incentives or the furlough program that the government was offering to make sure that our customers and other SMEs have the best chance of staying afloat during these challenging, unprecedented times. So it is really more of turning our business rather than into making new loans right now, very consultative, very informative to our customers. And as we start to make new loans, as restrictions start to let down or come removed, that's when we plan on building Capify back up.
Yeah, absolutely. And any last questions from anybody else on the webinar? Maybe any specific questions you've got, like who had one, like Patrick had earlier, I think it was, with regards to a startup, or anybody with regards to their own business looking for advice around funding at the moment, alternative streams of funding. I think Graham says he applied for a bounce back loan. Took him 5 to 10 minutes, but yet to hear back around that yet, because like you say, they're 100% government backed.
It's 100% guaranteed. Just to put it in perspective, so in the US, the equivalent of the British Business Bank, there's an organization called the Small Business Authority, the SBA. And it was reported for our equivalent of the business bounce back scheme, which we call the PPP loans in the US, the payroll protection program. The data that was told to us by the government that there's been more loans given in 14 days than there were in 14 years. So it just gives you an idea of the bandwidth required to fulfill all these requests.
Yeah.
Now, the US obviously has a lot more of a population, but then we also have a lot more lenders participating in it. So, you can't, part of the challenge is you also have to be reasonable with manageable expectations. It's not just 100% guaranteed and, they just make the loan, the government then reimburses them. They have to check the boxes that they've gone through. Otherwise, if the loan doesn't perform, the banks or the lenders don't want to be in a position that they don't get reimbursed if they didn't underwrite it properly.
Jazz says, what's the percentage rate from Capify lending typically?
So that's a hard question to answer right now. Previously, pre-COVID, we were about a 70% approval rate. It really depended on the source of business that it was coming from. If it came from one of our partners, it was much higher than someone that was just randomly coming in off the internet or general marketing promotion. It's very hard right now. Obviously, if you're a closed restaurant right now, there's not much, unfortunately, Capify or any other lender can do that's not government backed without collateral, secured lend. Yeah. Unfortunately, like most things right now in this environment, there's no visibility to really tell you what our approval rate will be in COVID. And any of my competitors, anyone in the industry that does, quite candidly, they're just guessing. It's impossible to tell right now.
And I mean, just having this conversation with you offline, share here, but just chatting to my best buddy in Dubai and saying, what are you doing this evening, joking, and he was saying, I'm off to the pub, and I was like, laughed again. He said, no, we are actually off to the pub. They've reopened things here. You're allowed to see up to 5 or 6 people, I think he said, in one social instance, and restaurants, bars, cafes have opened up at 30% occupancy. There's just so many dangers there, isn't there? Because you even think, if they're managing to somehow get open at a 30% rate and still managing to somehow cover their overheads, it only takes a small spike before that comes tumbling down again, and then there's no chance of getting funding, is there, off the back of that?
Yeah, no, I think it has to do with the pivot analogy and the backup analogy. So just like in the beginning of this webinar where I said it really makes sense to have a backup or reserve capital, I think as an SME, you also need a backup and a reserve business model. You have to assume there's no zero-sum game in this, that one model is going to work perfectly. So in your example, if you're a pub, my understanding in the UK is that they're allowing takeout and delivery now at certain pubs. Yeah. Or if you're a restaurant, that even if they open up, you should be pushing that takeout and that online delivery as hard as possible, because there's no guarantee that whether it's the UK or any other country is going to reopen, and then there's going to be a shutdown again at some point. And I think if you could prove it's like anything else in life, the more diversification you have, the more successful your business is going to be, and the more successful your business is, the greater chance you're going to be able to access financing. Yeah,
sort of. A friend of mine is a restaurateur down here. He's got like three or four restaurants here on the South Coast, and he opened up a drive-through last week. Again, just spent 5-6 weeks, I guess, brainstorming different ideas, and then just to do this, to open, I think it was like a Thursday through Sunday to start with, to start generating revenue.
Yeah.
Like you say, diversifying those kind of revenue streams and kind of proving that model is absolutely key. And I've spoken to so many people over the last 6 weeks, different entrepreneurs, different CEOs, etc., who have pivoted, and lots of businesses have been doing very well. But I like what you said again. There's no guarantee then, once things do get back to whatever the new normal is, that those businesses will carry on at such a high revenue return.
No, absolutely. So yeah, like I said before, the key is diversification of business models, products, services, because nobody knows. And this could be the new norm for quite some bit. And if you're able to, going back to your restaurant example with your friend, the drive-thru is working even when the world reopens, why not keep it open?
Yeah, absolutely. Cool. Any closing remarks from yourself, David? I'm just going to post up any other questions here.
Sure. Again, I think that the alternative finance industry with companies such as Capify have always played an important role in the last few years to SMEs, and I think will play even a more important role as the country starts to reopen, because you're seeing it with the business bounce back scheme. SME borrowing demand, in my opinion, will be at an all-time high. And the banks have historically not been able to service a big portion of this community. Pre-COVID, they're demonstrating now of their approval rates and their speed during COVID. And we believe post-COVID, the alternative finance industry is going to even take a larger percentage of SME lending over time, because we do have the ability to move faster, pivot quicker, and provide more accessible capital to SMEs compared to the traditional system that's been around. And let's face it, almost everything else in life has been disrupted over time. And I think banks are going to be really no different, especially for those banks that required historically a face-to-face meeting to get to know the customer in order to be able to lend to them.
Great. Some nice comments saying thanks for a great session. You are very welcome. And easiest way, and maybe we'll bring that slide up, shall I, David, for people to connect? It's probably the easiest, isn't it? If I focus on your, there
sure. We go. So there's our website, there's our email. I am accessible on LinkedIn as David Goldin, Goldin. I'm a very hands-on entrepreneur, very much in the market for SME business owners. So if any business owners want to just reach out to me, happy to respond or provide any help as well. And we're really out there to support the SMEs and the market that we operate in.
Awesome. Well, thank you very much indeed for your time. Greatly appreciate it.
Thank you for having me. And I hope this is helpful for your listeners.
100%. Yeah, absolutely. I think it's right on the money at the moment. No pun intended. Especially, like I say, coming off the back of the latest news we've had in the UK last night at 7 o'clock. We're not even 24 hours since that's come out, so a lot of people are going to be doing a lot of soul searching, I'm sure, in the next week or so. You're welcome, Patrick, Graham, Jazz, all great comments saying thank you very much indeed. Brilliant. Okay, I'll leave that slide up there so everybody who watches the replay, so you get a lot more views on the replay. This will be up here on Crowdcast, everybody, and it will also within a day or so be up on our YouTube site as well. So all replays. We'll leave this as the last slide. You can see David and Capify's contact details on there. Once again, thank you very much indeed, everybody. Have a great rest of the week.
Thank you very much.
Cheerio.